everyone, welcome to a special presentation today where we're going to take a look at Gann's swing chart. It's one of the most simple of tools to use in trading, and yet it gives us some very powerful setups in a market. This was a presentation that I did to the Perth branch of the Australian Technical Analysts Association on October 16 this year, and there was quite a few requests from people to get a copy of this report. So what we're going to do is to create a video for you which will be on the website, and you'll be able to go back and review that as many times as you wish. What we're going to do is to have a look at some important trading techniques, but of course what we have to do first legally is to provide a disclaimer. And what this is a disclaimer to you that the presentation and its contents are general. They're not personal financial advice, and they haven't taken into consideration your financial position, your needs, or your objectives. You should recognize, of course, that CFDs are high leverage products and they do carry a level of risk where you can lose more than your initial deposit. So you need to make sure that CFD trading meets your objectives. It's also important to point out that the performance of any trading system or methodology is not indicative of future results. Now, my company, Stockmarket Profits Proprietary Limited, is a corporate authorised representative of FINSA Proprietary Limited, which is regulated by the Australian Securities and Investments Commission. So what we'll do is we'll get straight into it, and what we're going to do in this presentation is to give you a trading plan based on the use of Gann's swing chart. And what we're going to do is to have a look then at how that swing chart gives us an example of the next potential campaign in a very common stock, and I've just chosen one here which is going to be Telstra. Then we'll have a look at the share price index and see exactly what that is and why we could consider using a CFD for trading the share price index. Therefore, we need to have a look at Trade Direct 365 and see who they are and where they come into the picture. We'll have a look at using the share price index to cover any potential loss that we have in our portfolio holding for Telstra. So the first thing that we're going to do now is to explain a simple Gann swing chart, and we'll do this by use of Market Analyst, a fabulous software program and certainly market leader in the world today in the Gann methodology. Let's have a look and see how it all works. So now we have a typical bar chart in Market Analyst, and fortunately for us, what they've done is a big favor in that they have color-coded the bars so that we can see the areas of indecision in the trading. This is a daily chart, and one of the things to remember here is the swing methodology requires a break of either the high or the low of the previous bar to change the direction of the swing chart. Now, in this particular bar chart, you can see that we have red bars. Now, what a red bar simply indicates is that it has broken the low of the previous bar, but not the top of the previous bar, and has continued down. So as long as we just break the low of the previous bar, what we're going to see are red bars. Now, you will see green bars, and what green bars indicate is the market is in an upward movement because it has broken the high of the previous bar. So as long as the high of the previous bar is broken, the bar will be colored green. Occasionally you'll see a black bar through here, and this is what we call an inside bar, and that simply means that the market in relation to the trading of yesterday has not gone either higher or lower than that previous bar. And very rarely, but on occasions, you will see a blue bar, and a blue bar indicates the market's gone both higher and lower than the previous bar. So both the blue bar and the black bar represent some indecision in the market, and typically what we need to do from a swing trading point of view is to wait until that indecision is resolved. And that may be 1 or 2 days, but you'll see in most cases it's typically the next day. What Market Analyst has done for us also, which is very, very simple, is we can go into the Tools folder, we can go into the Swings folder, and I now have a Gann swing chart overlay. And what this does, and you can see the line through here, it's now creating a Gann swing chart for us, which just points out in a visual basis where market momentum has changed trend or direction. So you can see this green bar through here, July 3, the market made a higher top, higher bottom bar, and then it turned around and started a decline. So the swing chart follows the decline until the decline is actually arrested and traders start buying it again, which is evidenced by the green bar. So as long as we have green bars, we're going to have a swing chart moving up. And when we get a red bar, which has broken the low of the previous day, the swing chart is going to move down. Now, the reason that we do this is because it creates, first and foremost, an indication of the trend or the direction of a market, but it also gives us some patterns that we can use to find exceptional opportunities. Now, what I'm going to do is just advance this one day into the future, and if we zoom in on this area now, you can see that this particular day has broken the low of the previous bar, so the swing chart turns down to the low of that day, indicating now that the trend has changed, albeit temporarily, but the momentum is now down in this market. You can see that the next day is a lower top, lower bottom bar, so the swing chart continues down to the lowest point, which is the low of that day. We'd see the next day has come through here. Now this is an inside day. In other words, the trading for the day or the prices of that day were neither higher nor lower than the previous day. Now, what we have to do here is to stop and wait for this indecision to be resolved. And you'll see that the next day, the market has now continued the downtrend. We haven't broken the previous high, so the swing chart will just continue down as long as the market is falling. Now we have another indecision day. Here you can see again the market's gone neither higher nor lower than the previous day. The next day is continuation of the downtrend, so the swing chart continues down following the main momentum of the market, which in this case is down. Finally, here we get an upward day where the buyers have come back to buy into the stock. You can see that we're in a zone of support through here in the past, and buyers have decided to come back and buy this stock, and they've broken the high of the previous day. So the swing chart now turns and runs up to the high of this day. The next day is a continuation of the buying, so the swing chart is following the upward momentum, and you can see that the swing chart has now rallied to the top of this buying day through here. An inside bar where perhaps traders are wondering whether this is a temporary counter trend or whether this is going to continue to rally. We haven't broken either the high or the low of the previous bar, so the market and the swing chart will just stay in a consolidation period, watching to see what the next move will be. Now the next day the buyers are back, and this market has moved up quite strongly, and what you can see through here is the swing chart has moved up to the high to signal the amount of the upward momentum. So as long as the market makes higher top, higher bottom bars, the swing chart will continue to follow. Again, we break the high of the previous day, so the swing chart follows it up. Inside day, lack of momentum through here, so there's a little bit of indecision, and we watch and we wait. Again, the next day through here, we get a very big buy signal through here, so the swing chart's continuing to run up because we haven't broken the low of any of these days, so the momentum is still to the upside. Then we get another higher top day and another higher top day, so this is showing us the buyers are in this market. A very big move up through here, a big overnight gap. As long as the swing chart is moving up, it's telling you that the momentum is on the buy side. Now what we see is another upward day, but finally this market shows that perhaps some traders are considering that this market has run quite some distance in price from this major low, and they're perhaps taking profit. But we have got a break of the previous low, so the swing chart moves down with it. And you'll see that the swing chart continues to move down while prices decline. Eventually, you'll see that we get a upward bar. This is showing us here that the momentum changed at $14.62 and buyers consider it to be good value at that price. The next day we can see is an outside bar, and that of course is where the market has gone lower than the previous day's low and higher than the previous day's high. Indecision in the market, and the swing chart will hold on the previous bar until the indecision is determined. And we can see through here that the next day the market continues to rally up, breaking the high of the previous bar. When it goes lower and higher than the previous day, this is the lowest point that the market got to. So we pull the swing chart down to reflect the lower prices, and then we move up to the top. And you can see through there that the market continues to rally. So that's something that you might want to practice a little bit to get it clear in your mind, because these swing points or these turning points are now going to be crucial to give us important visual clues about the next campaign in the market. So we've seen how the swing chart is drawn, and it's important to remember that the swing chart will only move when the high or the low of the previous bar is passed. The inside and outside bars are indecision, so we wait for a clarification of the trend before we actually move the swing chart, and that's an important feature to remember. Now when we start drawing the highs and the lows and putting them together, we get one of my favorite patterns, and this is the 3 higher low or the 3 lower top pattern, and it's a fabulous pattern, a very reliable pattern for market trading. Let's have a look at an example of the 3 lower top pattern, and this is Iluka Resources, a typical stock. And you can see through here that what we have was a major high here, September 3. Now we had a couple of days down, so the swing charts moved down. Then we had one day up through here, but this only lasted one day. Now this may have been buyers who thought that this market was going to continue to rally, but the next couple of days have shown quite clearly that the sellers have now taken over and they're in control. And what we see then is a continuation of the downward move. You can see through here again, September 15, there was an attempt to break the previous day's high, which only lasted very temporarily, and then we get a continuation of the downtrend. What this means is that whilst there are some buyers who think there is more to go in the price of this market, they're being overruled by the sellers. And the sellers are getting very, very active in getting out of this stock because they think the market's more likely to fall. When we see 1, 2, 3 lower top, lower bottom swings on a chart, we're looking at a very clear picture from the majority of traders that the market is now more likely to decline rather than rally. And that's what we need to know as traders, is whether a market's going to decline or whether it's going to go up. With a signal like 3 lower tops, once the market trades below this last swing low, in this case about $8.46, market is much more likely to decline rather than rally. So we can sell short or get out of positions here at around $8.45, and we put a stop loss just above the previous top. Now I'd have the stop loss about $8.90, just a few cents above the last swing top, and that will give us a little bit of wiggle room. Typically I don't want to see the market take out this swing top, because then something is wrong with this pattern. If I get 1, 2, 3 lower top, lower bottom swings, then the market is more likely to decline. And you can see that from this low at around $8.45, this market fell all the way down to $7.22. So there was an excellent opportunity for short selling in this particular market. Here's another example. This is JB Hi-Fi, a major retailer in my home country, and this is a monthly chart. Now when we look at a monthly chart, what you'll see through here again, major peak formed December 2009, a next lower top formed September 2010, a third lower top, lower bottom swing here March 2011. When the market trades below the low of the previous swing, which in this case is $17, the majority of traders in this market are thinking this is going to decline. And this is typically the major traders, the institutions, the larger fund groups, large corporate traders. You can see again, 1, 2, 3, 4, 5, this little setup through here has come through. when it breaks this swing low, you can see the swing low was $17.14. The market fell all the way down to $7. So there was a fabulous pullback through there. What we notice at the bottom, and if we just zoom in on this particular area, you'll see on a monthly chart, we've got 1, 2, 3 higher swing lows, higher swing tops. This is a very important signal that somebody is accumulating this stock. And typically when you see this pattern again, it's the large corporate traders, the funds managers, those groups that like to buy in big expecting a large rally. It's a very easy pattern to spot with the swing chart. You can see through here that the break of the top, we would be buying into this market around $10.90. Our stop loss behind the last low at around $9.70. And from $10.90, this market ran all the way up to a high price right up through here in November 2013 at $23. So they doubled our investment in this stock from a very simple pattern that we recognize from Gann's swing chart. Let's have a look at a major index. This is the DAX, the powerhouse of Europe, the German index. And again, what we can see through here on our daily swing chart is 1, 2, 3 lower tops. So back here in July, we had a very early warning that the DAX was likely to decline. Again, we can sell short at the break of the final swing low, and you can see we put our stop just above the high, and we would have had a fabulous result through here. This particular pullback continued on until August 8, when we get 1, 2, 3 higher swing lows, higher top, higher bottom swings, and finally the market continues to rally up. So again, another important signal through this particular area. We come up to the last major peak through here, which was September 19, a peak, 1, 2, 3 lower top, lower bottom swings. So we know at the break here at about 9,350 that the DAX is more likely to decline. We put a stop loss above the high at about 9,550, and you can see again we had a fabulous pullback just by following this very simple chart pattern. What we'll see on occasions is the currencies will do this as well. All liquid markets will produce this pattern from time to time. Here we can see in March, the Australian dollar, US dollar currency pair, 1, 2, 3 higher top, higher bottom swings. This top just broke above the previous top, so it fulfilled the pattern. And again, what we saw was a nice strong rally out of that pattern. Coffee is a well-known commodity, and there are some great opportunities in this market. You can see on this weekly chart, back through here, November 8, the market made a major low, 1, 2, 3 higher swing lows. We even had a fourth higher swing low. So we would be buying in at the break of the top around $119.20. Stop loss goes below here. I'd have it about 108.80, and you can see through there that this market ran all the way up to nearly 210 before it had any kind of a break on the weekly chart. National Australia Bank, again what we can see is a major low formed here, June 14 on the weekly chart. You can see again 1, 2, 3 higher swing lows on the weekly chart, higher top, higher bottom swings. Entry into National Bank at about $31.60, stop loss here around $30, and from $31.60 this market rallied all the way up to around $37. Excellent profit from a very simple pattern. BHP, we can see a major peak on the daily chart, August 19. The market then produced 1, 2, 3 lower top, lower bottom swings. We'd get short in BHP here at about 36.85. Stop loss here at about 37.85. And you can see the market fell all the way down to $32. Fabulous indication through here. Ardent Leisure is another group that's on the Australian Stock Exchange. This is a little bit of a messy one, but it's important to see all examples of this. You can see that on the daily chart there was a lot of indecision through here. This was making lower top, lower bottom swings, 1, 2, 3, and then the market started to decline. The Dow Jones Index is probably the most important and closely watched chart for stock traders And this was just perfect. You can see back through here in July, we had a peak in July 17, and we get 1, 2, 3 lower top, lower bottom swings, pull back through here, getting short at 16,850, stop loss here at about 17,100, and you can see this market fell to 16,3. Then we had 1, 2, 3 higher top, higher bottom swings, and again we could get long in this market about 16.8, stop loss here at 16.5, and the market continues to rally up. It's put in a major false break top here September 19, and again 1, 2, 3 lower top, lower bottom swings. We get short on the Dow around 16.9, stop loss here about 17.2, and you can see that it fell all the way down to 15.9. So there's 1,000 points there of opportunity for us. One of the major stocks that we're going to look a little bit more, Telstra. This is a major communications carrier in my country. You can see through here we have 1, 2, 3 higher top, higher bottom swing lows on the daily chart. When Telstra breaks through the top here at about 535, 536, it's a buy signal. Stop loss underneath the low at about 526, a risk of 10 cents. From 536, this stock climbs about 40 cents. So there's a 4-to-1 risk to reward. We get a signal of resistance here on the swing chart, and then again what we can see is 1, 2, 3 lower top, lower bottom swings. This is telling us that this market is now likely to decline, and you can see again through here that this market's pulled back. It's a very powerful, very reliable signal. About 85% of trades using 3 higher top, higher bottoms and 3 lower top, lower bottom swings will be correct. Of course, we always use a stop because we need to limit the risk to our trading capital, but it's a fabulous pattern and one that you'll see very often when you're looking at trading signals. So now that we've seen the 3 higher low, higher top pattern, and we've seen examples of what this particular pattern means on the chart. But remember when we looked at Telstra, we had a signal that told us that that market was more likely to decline. But when we talk to our financial advisors, they're telling us don't sell our Telstra shares because you'll incur a very big tax bill. Or maybe you won't get the dividend that you're relying on for the income. So what we need to do then is to figure out what can we do. We can sit back and just watch the value of our portfolio decline, or we can take insurance out on our portfolio, and that's what we do with the share price index. Now the share price index is a futures contract, and it started trading in Australia in February 16, 1983. Now there's very similar markets around the world. You've got the DAX, you've got the Dow, you've got the FTSE, the CAC, you've got all of those different markets that you can trade, and the major traders, the institutions and the large corporate traders are using these futures contracts to cover any loss that they expect will hit their portfolio. They may have 10 or 15 or $20 million worth of stock in a particular company. If they think the market's going to decline, they can't run out and sell it because they'll simply crash the market with that huge volume. But they can take insurance out, and that's what they use futures contracts for. The share price index is taken from the values of the XJO, which is the top 200 stocks in my country, and basically they take all of the shares of the top 200, make allowances for the capital on issue and the price of the market to come up with a figure that's a good indication of the Australian market. The futures contract covering the top 200 stocks has an expiry date every quarter, and that is the third Thursday of March, June, September and December. So you need to be aware that these contracts do have an expiry date, and we'll talk about that in a minute. But it's important to remember that futures trading are contracts. Now, if the share price index as a commodity is used by the larger traders to take insurance out on their portfolio, then if we want a clue about where the major traders and the large corporates and institutions think the stock market's going, we look at the share price index. These are what the professionals think. This is what they expect the market to do, and we can get a very good clue from looking at their trading on this chart. And when we look at this trading, we're going to see a very familiar pattern. And just remember that right now we're talking about October, which typically has a penchant for pulling markets back. Most of the major crashes have been in October, and it does make markets a little bit on edge. Let's have a look at the chart for the share price index. When we look at the chart for the share price index, this is the daily chart. You can see the last major peak occurred here, September 3, 2014. And what do we see? 1, 2, 3, lower top, lower bottom picture. And this is very important because remember, this is dominated by the large corporate traders. So they are anticipating that the Australian stock market is likely to go through a major decline. And this signal or this indication was given to us very early in September. And you can see that on this occasion they were quite right, and the market has continued to decline. What we had was an opportunity to get short here around 55.30, and you can see that so far the market's dropped as low as 5100. So it gives us a very important clue about the trend or the direction that the corporate traders think the market's going to go. Let's have a look at the specifics of the share price index, and the contract as traded by the Sydney Futures Exchange is $25 per point, and it moves in 1 point tick value. Now the margin required to trade this market is approximately $6,000 per contract. What we need to remember is it trades 24 hours a day, and the brokerage is variable between traders, but it's typically somewhere around $20 to $25 for a full round trip. Maybe $10 in, $10 out. That's depending on the brokers. But there's an interesting thing to remember here, that what we have is a new company into the market, and that's Trade Direct 365. They've bought a package into the Australian market for trading CFDs. Now, the directors are very experienced. They've worked for administrators, they have worked for CFD operators, so they've been around for some time and they understand the CFD market. What they've done is produced an account that is designed for traders, and I can tell you from my own personal experiences, I've found them very fair and very reasonable when they're involved with traders. They understand how difficult it is to trade, and they will do everything they can to assist you when you're learning to trade, particularly with CFDs. One of the things to remember about CFDs is most of the CFD operators will use the markets and then they add a spread. So what they do is they add on values to the underlying market. So you'll find that if they offer you a contract on the XJO, there's additional 1 or 2 points added onto the bid or the ask, and that is where the CFD operators make their profit. But the interesting thing about Trade Direct 365 is that they do not add a spread. You are trading the same price through a CFD as you are if you were trading direct through the Sydney Futures Exchange. What we'll see on this screen is you can see that the Sydney Futures Exchange, through its brokers, is offering a bid and an ask on the share price index at 52.30, 52.31. This is the screenshot for Trade Direct 365, and you'll see here 52.30, 52.31. So they do not add a spread onto the share price index market. You're trading exactly the same prices as any other broker directly attached to the Sydney Futures Exchange. But the big difference for us as traders is in the margin. What we have to do if we trade through a typical Sydney Futures Exchange broker is put up a margin content. And as you can see through here, it can vary anywhere from $6,000 to $7,000 if you want to carry that position overnight. So that's a big chunk of capital tied up in one market. But if you want to trade a CFD, and with Trade Direct 365, I've done like for like, in other words, $25 per point. This case, I've used a stop loss of 20 points and a profit target of 20 points, and that trade requires me to stump up an amount of $660. You can see in this particular occasion, if this trade had gone wrong and my stop was hit, I would lose $500. If it hits my profit target, I would earn $500, but I only need to stump up $660 to take the trade, or around 1/10 of the margin that I need with a direct Sydney Futures Exchange broker. Let's go back to our Telstra position, and let's assume that you have 10,000 Telstra shares. Every cent movement in that particular stock means plus or minus $100 to the balance of your portfolio. Now the three lower top low that we looked at is $5.58. Let's go back to that Telstra chart, and what we can see through here is that the third lower swing low is $5.58. The market trades lower than that. This is much more likely to continue to decline. And remember that we've got financial advice from our accountant or our advisor that we shouldn't sell this stock because we're going to incur a tax issue or we're going to have no dividend coming through. So we don't want to sell the stock, but we don't want to just sit on our hands and watch our portfolio go lower and lower. So if Telstra was to fall down to $5.16, it might drop around 42 cents, and that means that our portfolio has lost around $4,000 in value, and nobody wants to sit there and just watch the value of their portfolio decline. But what we can do is we can take a trade out on the share price index and we can sell a contract, and I've nominated here that we're going to sell a contract for $10 per point. Another great feature of using the CFD is that you can have the amount that you wish to use as your tick value, a minimum of $5. So what I've said through here is that I'm going to take $10 per tick movement or per point, and if I had a stop loss 100 points away, you can see that I would lose $1,000 if that trade goes wrong. And I've left the profit target alone here because I don't know how far the market is going to fall. Let's go back and have a look at our share price index chart. So we would sell short here. You can nominate the price of each tick value on the CFD depending or determined by the amount of your portfolio. But you can see we can actually take a trade here and make money on the market while it's declining, or simply just cover the amount that we're going to lose in our portfolio. Heaven forbid, but there are occasions where you get things like the 1987 stock market crash, where the market drops 50% in value. We can cover that loss by taking a CFD out on the share price index and watching as the market declines. The value of our SPI CFD trade will make us money. One of the great things about the Trade Direct 365 contract here is there are no interest charges. There's no spread on the prices of the Sydney Futures Exchange to other brokers. The brokerage value is very nominal. It's $5 per $25 tick value, and that is that if you had $10 per point, as we had in my example, then we're going to pay $10 total round trip. So if it's $100, the minimum is $5, so we would have $20 in and $20 out, and that would be a total of $40. So it's very cheap to be able to take insurance out to cover our portfolio. If we take a SPI contract out through here and the market declines heavily, we might want to cash in some of that and actually make a profit. But we're covering our portfolio. If the market returns and comes back up and we haven't done anything about it, we simply close that trade out at our entry price, and that means that we've just had a little bit of an insurance policy in case there was a huge market crash, and all it's cost us is $40 in brokerage. Very cheap insurance to protect your portfolio. Some of the advantages of trading the SPI: there's no dividend payments which might cause a slide in the prices. Because it's a futures contract covering the top 200 stocks, there's no splits, there's no mergers, there's no trading halts unless all 200 stocks suddenly stop trading immediately, and that's very unlikely. No interest costs to hold your position. There's no delisting or suspensions because we are spreading the risk over 200 stocks. It's much cheaper in brokerage to take one contract than buy a big parcel of shares. And it's not subject to individual stock prices like we might see in other markets. We can always sell short. There are no bans on futures trading short. There were occasions during the GFC where you were not allowed to short sell in the physical stock, but you can always short sell in futures contracts and in currencies. And there are opportunities for intraday trading. For example, let's have a look at the share price index. And what we're going to see here, October 14, you can see that because this market trades virtually 24 hours a day, it's about 20 hours in fact, but you can see that overnight following the Dow, the share price index was falling. The traders in Australia, remember this is the very large fund managers, institutions, thought that the pullback in the share price index was overdone and they started buying it back. But we got 1, 2, 3 higher top, higher bottom swings on a 5-minute chart. Now for intraday traders, this represents an excellent opportunity to buy into this market just above the swing top, stop loss just behind the swing low. And you can see through here, we would have bought the SPI at 51.35. It continued to make higher top, higher bottom swings until this point through here at around 51.70. So there's about 30 points there of profit at whatever price you wish to nominate for the value of your CFD trade. Trade Direct 365 during the month of October 2014 have an offer for traders. They're going to refund any losses that you take up to an amount of $365 for traders who open a new account in October subject to the following conditions. And you could put this video on pause and go through and read those conditions if you wish. You'll find that they're very reasonable and it gives you the opportunity to go through and test your theories live with real money, knowing that if you incur a loss up to $365, they will refund that back. Their website is tradedirect365.com.au, and this is a screenshot of their website. You just go through and you can join in and open an account. You can also open up a trial account if you wish. One of the things I would ask is that if you do go through and open an account, that you put my name as the source of the account. There is a cost to Trade Direct 365 in having me as an authorized rep, and there's a lot of paperwork between the regulators and Trade Direct for their authorized reps. And they will also send me a cup of tea every time somebody opens an account. So I'd appreciate it if you do put my name in a form as the reference for opening the account. But I've only scratched the surface here today of what the swing chart does and how it works. If you are interested in learning much more, and there are many more patterns with the swing chart, there are many more techniques that will refine and improve your trading opportunities in the markets. If you go into my website, tradingwithgods.net, you'll find that there is an area through here, the trading tools section. And if you click on this particular menu item through here, what you'll be able to do to see the videos that I've created to help traders learn these advanced GAN tools. They're fabulous for trading in the markets. They're all on video. They're very simple, very easy to follow, step-by-step instructions. I produce weekly reports for these particular sections so that traders can get a follow-through, see up-to-date information. And all of the reports, all of the backup is for life. There is no subscription to pay. You only pay once to buy that particular section, and then you have the ongoing video support and mentoring for as long as you want it. The Trading DNA package is the complete GAN package that I've produced, and it covers the GAN swing chart, it covers the Fibonacci series, the square of 9, time in the markets, price in the markets. It covers all of those fabulous GAN tools, the GAN fan angles, and it shows you how to use them. And we do a major weekly report that keeps you up to date with all of those tools in the current market environment. So at the end of this video, what we have seen is a new chart method from Gann, the Gann swing chart. Very simple, very easy, but extremely powerful in the markets. And we've seen a new pattern, the 3 higher low or the 3 lower top swing pattern, which will give you a very important early warning about the next direction or campaign in a market, which allows you to insure your portfolio or perhaps make some money out of that particular move. And we've seen how we can use something like the share price index as a CFD to protect our existing portfolio just in case we happen to see a major crash like the 1974 or the 1987 crash, and it's so cheap to take out that insurance. Trade Direct 365 offers the cheapest CFD access to the share price index. Very simple opening process, and they're very happy to do whatever they can to help you out, because obviously if you trade successfully, you're going to trade bigger and bigger parcels, and they stand to make more money through the brokerage. And also, you will be more inclined to recommend their services to your friends if you find that they are looking after you as brokers should. You've also seen on my website that I've got the advanced Gann material for you, step by step on video, so that you can put these onto your iPhone, your iPad, you can put them onto your tablets, and you can watch them anytime that suits you. You also get free weekly reports and free updates on the website, and these will last a lifetime. There's no ongoing management costs. You simply buy the video and we're there to support you for as long as you need after that. If you do have any questions or queries on it, you're very welcome to shoot an email through, and I'll be happy to answer that for you as quickly as I can. I wish you all the best and good luck with your trading in the future. Bye for now.